Hello and welcome once again to The Market View. My name is Angus Campbell and I'm joined by Bill Hubard, who's Chief Economist of Markets.com. Welcome again, Bill. Good to see you.
Thank you, Angus.
So this week, obviously, a few things to discuss, but let's start with last night's FOMC minutes. Not really accepted particularly well.
Well, I understand how the markets acted or reacted, but I mean, the simple fact is the bond market had been telling us that Operation Twist was basically all we were going to get, and that, quote, the Fed would keep their options open, and that's basically what the Fed told us. But as we all know, the markets right now are just wishing, hoping, praying for deliverance, if you will, and we didn't get it from the Fed, we didn't get it from the Bank of Japan, the Bank of Korea, the Brazilian Central Bank, and we may not get growth numbers from China in the morning.
Yeah, but we've obviously had action from the BOE and ECB this month. The BOE obviously increasing QE and the ECB cutting interest rates. So what's holding back the FOMC at the moment?
Well, I think it's, which we keep calling it, the big bazooka. And I think the Fed, after QE1 and QE2, in a second round of Operation Twist, may feel there's only one thing left, and it may be QE3 or whatever we want to call it. And they may be concerned that they don't want to act too quickly. Now, the market, of course, would rather act too quickly than too late. But remember, we've got two more meetings. We've got the August 1st meeting, and then we've got the September 13th meeting. The Fed has to do something by at least the 13th of September, because we've got a presidential election on the 6th of November. Anything later would be looked at as being political, and they cannot do that.
Well, that's interesting you say that, because I would have thought that anything before the election would be seen as more political. So, I mean, if I was a betting man, I would probably say that we might see them move at the latter part of this year. But anyway,
I mean, you know, if we could say after the election, when it's not, you know, at the November or early December meeting. Yes, okay. I think
we'll certainly wait and see as to what the Fed do. Other topical points, obviously, markets disappointed. They're negative today. You made a call last week that you'd expect the euro against the dollar to trade about 1.15 by year end.
Yes.
So far, that call looking not bad. Do you see that getting there possibly quicker before year end?
Not so much quicker, because I'm not sure. I think it's a day trade, okay? And one thing we've got to look at is, people may forget, really from the 15th of July till about the 11th of September, volumes, because of both the Olympics and the Paralympics here in the UK, volumes could be very thin, because we may have a lot of people sick watching the television rather than watching the screen. So I think that may, that may temper the move right now. But my feeling is we are heading towards 115, or we could be getting to a level not seen in the history of the euro. But I think this, if nothing else, maybe this now will convince both the bank, the European Central Bank, and the authorities in the Eurozone that this is a very serious problem. We could be looking, after 10 years, the elimination of the Eurozone or the elimination of the euro as a currency. So I think that's what the market is really concerned about, is how quickly, and I do feel ECB, not in August, maybe not September, but we will get at least one more ECB rate cut before year end.
Okay, well, we'll certainly keep an eye out for your health. I know where to find you if you are ill. Skulking around the big village, no doubt. But also, we've got some major things that are sort of coming up. The German Constitutional Court seems to be delaying its decision over whether the ESM decision agreed at the European Summit is legal or not. And that's obviously just causing a great deal of uncertainty, hence the negativity today. But also, we've got this China GDP number, which is pretty important. What do you see there?
Well, I guess I'm probably in the 7.5% range. But I think one of the things why it has such meaning is because maybe 2 years ago, when it was first Greece, and then the contagion started, everybody said, well, I'm not really concerned about it. Who cares about the Eurozone? Who cares about the UK and the US? You know, the Chinese will bail us out. But as we've seen, especially with commodities, the Chinese are not bailing us out. And I think this is one of the things, and we had not negative comments by Wen Jiabao overnight, but not positive comments. And I think this is the thing that's concerning the market. But the key here is going to be, whether it be commodity, but I mean, unfortunately, overnight, there's been one trade, buy the dollar, or buy the dollar. Or as we've seen, buy bonds, buy treasuries, even buy JGBs, and we've even seen some buying of Italian and Spanish bonds. So it really is the bond market, and it's a question of, I don't care about return on capital. I want the return of my capital, okay? We even had a negative 2-year auction in the Netherlands this morning.
Well, it certainly looks that even though volumes are probably going to be very thin with the Olympics, there's lots of still things to focus on. Yes. Thanks very much again, Bill. Great to see you. That's it. Thank you.